Eat it, boo-boo. You gotta get the pips from the picnic basket. Yo, you guys ready? Okay. Good morning. Happy birthday. Shard is 32 today. Good morning. Happy birthday. Hey, it's 8:06 in the morning in New York. That means we are approximately 90 minutes away from the U.S. Trading session. Also, if you don't know, we have retail sales. No, not retail sales. Housing data. We have housing data this morning. Yeah, housing sales. Yeah, that's huge, right? That's pretty much it. Except for this Fed meeting thing. We got that today, too. So cool. Thank you for being here. Thank you for being a subscriber. Let's get going. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But always be small, stay humble, focus on the long term, never risk money you cannot afford to lose. So my name is Wayne. I've been on this Forex journey now for 20 years, and I still love it. It's awesome. It's really cool. Look. 95% of retail traders fail. Isn't that awesome? See, I'm an entrepreneur and I think I have a 5% chance. Hey, where I come from, when you're an entrepreneur, it's 1,000,000 to 1. So I got 5 chances out of 100 to get this right. Oh my God, I can do that. So anyways, here we are. We're able to accept the risk. It's our greatest strength, but it's also our greatest weakness. So today is a bigger risk event. Holy smokes. Holy smokes. Today is a big event. But I think 2 things. 1, the Fed's more dovish than everybody thinks. And I've been thinking that for a long time. And 2, I think the market's going to misinterpret what happens today. And there could be a lot of mistakes, whatever that means. So, very interesting times. And that's a blessing. At the end of the day, that is a blessing. May your life be interesting. So while you're here, ask questions, take notes, treat each other with dignity and respect, and I think we'll get along just fine. If you could, just as a courtesy, would you click the thumbs up button, please? If 1,000 people are watching, you'd expect pretty close to 1,000 thumbs up. So, would you do that, please? Also, take the time to subscribe. I'd like you to visit tradersway.com. It's an invitation to build a relationship. Yes, when you decide to have a broker, price is important. I think it's the least important, but Traders Way is competitive, so that's cool. Fast execution speed is super important. Swaps. Most brokers don't even pay you your swap. The swap you're due. It's sort of like buying a bond and letting your broker keep the coupon payments. Why would you do that? That's stupid. So anyway, Traders Way gives you huge swaps. It's awesome. But honestly, when you make this decision, the most important part of the decision is trust. So start now with the demo account and give them an opportunity to earn your loyalty and respect. So then when you're ready to trade real money, you'll already have chosen, at least emotionally, the execution partner for your successful trading business. So start that relationship today, tradersway.com. And here we is. Let's not start here though. Let us. Wait, hang on a second. Hang on a second. I want to start here. There we go. Makes more sense. All right. Here's where I wanted to start. Okay. Cool. So what do we see? What do we see? Well, we got this important meeting. Okay. That's it. I see there are two denominators, or two funding currencies. They're quite neutral as we wait. A little bit of a move here. Now, I don't know if you caught this last night. It was right after the day trading group met for the Asian session. I'm farting around doing my work, and it was made, news hit the market. First, it was Evergrande was going to try to make at least a partial payment on their debt, but not dollar-denominated debt, yuan, renminbi, denominated debt. And I think the dollar-denominated debt created this problem that they're in. Now, look, they're over-leveraged for sure, but as rates are going up, if you remember maybe just 6 months to a year ago, the yield on the 10-year T-note was, what, 0.8? And then it rose to, let's say, 1.5, like not quite double, but let's say interest rates on the 10-year T-note or yield on the 10-year T-note has gone up 50 to 75% in the last year. Well, that's in terms of dollars, and if your debt is in dollars and you owe more dollars and therefore your loans are more expensive, and I think that's what's happening, and you're probably going to see this around the world as well. And they certainly won't like rates going up even further. And once a taper is announced, rates will go higher. And a lot of things are pegged to the 10-year T-note. A lot of things are pegged to the dollar and all that kind of stuff. So that's the consequence. So you'll see Evergrande will pay renminbi debt, but they won't pay dollar debt. Okay? So anyway, so that's a little bit of a move there, some sort of payment there. All right, cool. And I'm playing it on Aussie because Aussie is your China play. Okay, and so you can see Aussie and Kiwi are up a bit. Well, pound is down, and euro, I guess, was down, up, and sideways. CAD, down, up, sideways. So anyways, yeah. Neutral going into the market. Yeah, Johnny was right after, huh? But notice that your pound didn't benefit. Yeah, and that's really it, right? So, wrong horse. Yeah, but it was one of those things, though, too, Johnny, though, like, it was a perfectly executed mediocre trade. And the only reason it's mediocre is because we all know the big event. So you took a shot, you had it, and yeah. And then what happens, right? So good. It was a good trade. You executed it well. All right, so looking at commodities, okay, and I got to zoom in here, maybe just drop into an hourly chart, and yeah, retest again, 70 for the third time. Is this a higher high now? So I'll have to update all my analysis, but I wanted to leave like this old stuff. You can see this old stuff is still valid. It's still playing now, right? If I carry this forward, look at this. It's gorgeous, gorgeous. So the thing is, as the price action pivots are telling us, is this a situation in which you are buying dips? Okay. Could be. I like oil. Notice that the reverse fib is in play. Okay, so bears are going to sell it at 72, and then again, bears are going to sell it at 73. So there's a bit of a battle, and I'm not sure if I really want that battle going into the news, but nonetheless, standard operating procedure for a bull would be this. So a bull's going to buy it at 71, bears are going to sell it at 72, and everybody else should get the heck out of the way. Gold. Okay, gold hit the weekly sell price and it's sold. Here's a rotation. By rotation, what I mean is on the shorter run, this is bullish. Let me change the color. Okay, this is bullish. Yep. Pull back. Can you guys see the MACD? MACD is below the waterline. Okay, it should be right. It's in a point where it has been contracting and probably will diverge right, diverge. Not divergence, diverge. What's up, Gregors? Okay, so I already got my lines in the sand. So a bull is still going to think somewhere between this line, and this line, A bull's still going to have a plan A here. So we'll label that A. And then a plan B would be at the double bottom here. Okay. The other thing to point out, not only is this a weekly M3, but what's the math? The math is bottom, 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 okay, bottom, 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 okay. Roll reversal. Thank you, M3. Okay. Cool. And until we find out a taper schedule, the dollar is strong. If they don't announce a taper schedule or hint at a taper schedule, dollar is going to remain strong. Okay? Well, when you're looking at things like high plus low plus close, things like previous lows are important to the math. Okay? And then the close is important to the math, which essentially says your new high is the old low. Hope says, so if I'm still a bull on the dollar, is it okay that selling at 77? It's all good. Just remember that you face the same event risk that everyone else faces. You know, we all face this Fed meeting. And I think where most people are going to lose money is, you know, still kind of betting on an outcome and betting on the idea that we get more clarity. I think the risk is we don't get clarity today. And bulls say, oh, that's bullish. And then bears say, oh, that's bearish. And maybe the bullest of bulls that buy the lowest of highs, and the bearish of bears that sell the high, the most resistance of resistance, they get it correct. Everyone that's late and chasing could really get destroyed today. So again, the biggest risk is people misinterpret what's happening and make their bets and pay a penalty. Okay. So that's all. Now, again, Hope, if it's interpreted that the Fed is not going to even announce a taper this year or wait till the very, very last meeting in December, right? Then, and which means they won't even start a taper till quite, well into 2022, then there's still 3 or 4 months in which you can front run the Fed and the dollar will remain strong, right? That's all. That ruins seasonality. And again, in the day trading group a couple of days ago, I talked more about the game theory of what Jay Powell is considering and how that will impact whether he makes an announcement today or not. Alrighty then. All right. Okay, let's start here. Aussie. Okay. Grab your lines. Mark this up. I guess I'll do this one. All right. Okay. Cool. Do we have a higher high? Yes. You have permission to buy a dip. That's what this chart says. Yeah, I mean, that Greg says, hey, we need to see what the Congress does with the tax plan. So the tax that's likely to get passed is the moderated version. And yes, it sucks that, if you make more than 400,000 or whatever it is, you have to pay more money. Okay. All right. I can handle that. But it won't make a difference. Ultimately, yes, it reduces disposable income, but for the rich. So if I was going to buy a $3.2 million yacht, and I found one that I really like, and taxes on me go up a little bit, a couple of percent, do I still buy the boat? Yeah, I'm going to buy the boat, right? So ultimately, I don't think that'll have a big impact on global trade. Now, it might hurt some industries inside the United States. It might change some spending habits. It might save some investing habits to avoid paying the higher taxes, that kind of stuff. But will it change the flow of around the world? Let's say this move from the U.S. to China and back. Will it impact that? No, it won't. No. But it does kill disposable income. But think about it this way, though. The new taxes will be on the rich, and then the Fed saved the day 18 months ago. okay, through quantitative easing. And this is why we're talking about we don't need it anymore. What did quantitative easing do? Made the rich richer. Bailed out the rich. Hey, don't hate the game. Become a player. So the way that it worked is the rich probably at least doubled their money and now have to pay 2% more in taxes. All right, fair game. Fair. It's fair. What happens to poor people? They're not invested. They don't own any assets, so it doesn't matter. They don't earn any money, so they're not going to pay higher taxes, so that doesn't matter. So as long as they keep going to Walmart, right, everything will be fine. No, love the game, man. King, love the game. Think about it. Think about it. Love the game. Now that you guys are learning this, you can see that part of the central bank's duties is focused on prices. So very often, people say, why does the Fed hate deflation? Why would the Fed hate prices falling? You ever wonder about that? Well, who benefits from falling prices? Poor people. They don't got no money, so they need prices to come down. Instead, the Fed wants growth with inflation. Because what does inflation mean? Prices are going up. But see, rich people own stuff. They don't buy stuff. They don't buy stuff. You don't buy a Lamborghini. You get it for free because the stuff you own has inflated in value. So when you refi your apartment building, it's gone up $500,000. And you're like, that's cool, man. I made an extra $500,000 in the last 5 years while I owned a piece of paper that said I own the property. So you literally did not lift a finger. So after 5 years of refi, you got $500,000. You didn't work for it. And now you go buy your Lambo. And they're like, oh, but, prices are up a little bit. I don't give a shit. This is free money. And you just buy your Lambo and you're done, right? So it's the growth and inflation that the Fed's focused on. So who benefits from that? Those that own. You want to be an owner. You want to own the stock market. You want to lend money to corporations or countries. You want to own businesses. You want to own portfolios. Okay? And the Fed comes in and keeps you rich. So you should focus on that and not buy stuff from Walmart. Okay? So why does the Fed, this is deflation, right? Deflation. Why does the Fed hate deflation? Why does the Fed hate falling prices? Because it's only good for people that don't own assets. And once the people that own assets go out of business, then the people that don't own assets go out of business. So anyways, so love the game. Just say, oh my God, I have a built-in hedge. If the stock market drops 40%, the government's going to come in and push it back up. Thank you. Think of it that way. Back in COVID, the stock market dropped 40%. And then it went all the way back up. And then even higher. So we went from minus 40 to some cases up 140 from the bottom, which just means we're probably up about 20%. Thank you, government. Okay? Thank you, government. Thank you, Fed. And now, really, I have to pay 2% more in taxes? Fair game, man. Fair game. I'll pay my share. The problem is, it's not because the Fed bailed me out. Right? So now, where's the money going? I guess not back to me. So anyway, so now The Fed bailed me out, kept me rich. Now my taxes go up, and there's an income distribution going from my bank account to somebody else's bank account. But you know what? If that brings stability, then well worth it. Okay? Well worth it. Okay? Basically what it, you could say, anyways, we'll leave it at that. All right, so anyways, yeah, so we got our lines there. How's our kitty cat? Okay, let's do our lines. Make sure we're ready for later today. Take a look at here. Yep, that's still fair play. Okay, you can see we have a moment of stabilization and maybe a higher low. So you have permission to buy dips on this one. Let's continue drawing our lines of support and resistance. No way, there we go. Okay, so we got something going on there. And this one, yeah, I like necklines, so I'm gonna do this one. And yeah, so just lots of little cautionary tales here. Good, got that for later. Kiwi, 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 not as good. Not as good. Okay, the other pairs showed something like this, and of course that's plausible, but it's less plausible as the other ones, just by a little bit. But if I was going to be a buyer of a kiwi, I would look for roll reversal action. Okay, which, right, down into there somewhere. But what this chart is telling me is it's a bit too aggressive yet, still. Okay, and if you need some help determining that, you can do this. Pull up your price action pivot points, click okie dokie. Okay, we want to see a pullback and then an up. Euro, okay, slightly better than the kiwi. Okay, draw your lines. I got a couple here. I need to put this one for a roll reversal. This one for upside, sell zone. Back out a little bit. Where else should we pay attention to? Looks like this is important. Looks like this is important. Cool. So I got that for later today. And less ideal trade and less of a good response. Once again, this popped up, dropped down. Okay, that was the Evergrande payment. Okay. Mr. Kennedy says, the taxes create a greater barrier to becoming rich and all that kind of stuff. Ultimately, what I'm most interested, it might not be taxes and income that people are worried about, but you can do GDP based on the income model, or you can do it on the receipts model. But the other way of doing it is when you're saying growth and inflation. Okay. Inflation. Okay. So people are worried that, we have 3.5% inflation, but if you have 5% growth, I guess it's minus, so we can call this real growth. Okay? As long as growth is higher than inflation, I can deal with high inflation. Okay, stagflation is like you got 1% growth and 3.5% inflation. Therefore, the real growth is negative, and that's a problem. But free capitalism doesn't do that. Okay. So, like the supply chain. issues that we're having now is because of government intervention, partially. Not totally. So, companies around the world lay people off because of COVID-19. 20% of the world's population loses their job instantly. Why? Because if you go to work, you're going to get sick. Not because people stop buying stuff from your factory or stop ordering your services from your skyscraper. Offices were shut down. So the government comes in and says, print money. So what does that do? Does that solve COVID-19? No. It increases demand. But we never had a demand problem. So now we got more demand and less supply. So thank you, government, I guess. You understand that? Okay, the question here is, why does Kathy Wood expect deflation instead of inflation? Because in that case, Fed does not taper. Okay. The bond buyers front run the Fed. Dollar gets strong. Inflation falls. Okay. And that would be because of continued supply shortages. Okay. So in some subsectors of inflation, inflation rises, even though real sort of proper inflation falls. Some sections of the industry that have vacuums in them might rise, and this impacts growth and slows growth. Okay? You see? So that's her take. Great. Good. Great. Okay? You just, at least she knows where she stands. See, that's the thing, guys. I always want you to think about your invitation to speak on CNBC tomorrow as a guest. Do you even have an opinion? What's your point of view? Okay? That's her point of view, and it's a sellable point of view because someone else in the world will share that same point of view and say, you know what? I agree with her. Maybe I'll give her some of my money. Okay? But if you're not really sure, then nobody's going to invest. Because nobody can agree with you because you don't know. You don't even have an opinion. No one can agree with you. No one can disagree with you. No one's going to say, "Oh man, you're stupid. Your point of view is so wrong." You're like, "I don't know what's going on," and it's just no value in it, right? Thank you, Canlid41. Appreciate that. Well, they've already told us that, Michael. When did they tell us by the end of the year? When did they tell us that? Okay, it's not even a debate. We already know this. It's already factual. Jackson Hole, right? Okay, this goes back to the Kansas City Fed meeting. Okay. So if you draw a line from the 27th, which is about here, to today, interest rates are exactly the same. The yield on the 10-year T-note has stabilized. It's exactly the same. So now we're going to try to discern when before the end of the year. Okay? If there's a window for traders to keep front-running the Fed, the dollar will get strong because they're buying dollars to buy treasuries to front-run the Fed. If the Fed is saying, basically, we're getting ready to pull the plug on this thing we call QE, then the game is over, the gig is up. There's no reason to buy more dollar, to buy more treasuries, to front-run the Fed, because the Fed is leaving town. Is this a problem? Okay. When does the Fed either kill, let's do this in a different color now. 1, kill quantitative easing. And 2, raise interest rates. When does the Fed do these things? In a recession or in an expansionary market? Okay, let me zoom in, not just 1950, but let's say since 1980, since the Wolf of Wall Street. Okay? When does the Fed kill quantitative easing and or raise interest rates? Not during the gray bars. Gray bars are recessions. Okay? These are times when you should be a buyer, right? So you've probably been told when the Fed raises interest rates, the stock market falls because money is more expensive and the gig is up. It's very difficult for corporations to maintain profitability. How many people have heard a version of that rhetoric? How many people have heard a version of that? Interest rates are going up, that's bad for stocks. Anybody? You might have also heard interest rates are going up, so the dollar gets strong because of the interest rate differential. Okay. That's it? Well, what about everybody else? 4 people answer the question? I don't know what you know, so I don't know what to teach you if I don't know what you know. Okay? If you go back and look at the last 18 times that the Fed started a cycle of raising interest rates. Okay? Think about this. If you go back in history and look at the last 18 times the Fed started raising interest rates. So a whole new cycle. Basically the bottom of the recession followed by interest rates going up. How many times did the stock market have a negative year? Again, the Fed raises interest rates, money gets more expensive. You've been taught that the stock market can't make money. So how many times has the stock market not gone up in those 18 periods over the last, I don't know, decades and decades and decades and decades, since grandpa's money? How many times did the stock market not go up? Once. Okay? Okay? So, in the last 18 interest rate cycles, 17 times stocks grew. The stock market went up. And in the first year, on average 15%, which is essentially double average. Why? Because the Fed's raising because things are good. They don't raise because things are bad. So very often people have been told just garbage. I don't know why, but I guess it makes people money. Okay? So when you hit this period, this is when the stock market falls. Okay? You can see how bad 2008 was versus the other recessions and how dramatic COVID was because the entire industry, this is subprime taking down the economy. This is COVID taking down not just subprime, every sector, every industry, every company in the world. Wow. Now, check this out. If you miss these periods of buying, okay, basically think of these gray areas as dips. Now, we're looking at GDP. We're not looking at the stock market. So you're going to have to think about the stock market, what it's doing during these periods. Okay? But so on average, the stock market over long periods of time yields you 8% per year, right? Or I guess year over year, right? That's the long-term growth. And so you can look at this as that sort of average line. Okay, great. If you miss these periods of investing, what is your year over year average? What's your long-term return if you miss buying the dip? I told you this, by the way, March of last year when I said you cannot save your way in prosperity. As this was dropping, I said, create a list of 10 stocks you want to buy. I even said, today's it. Today's now. This is the time. Okay? I slapped you aside of the head with a 2x4 to make sure I got your attention. Okay. So if you miss these buying opportunities, what's your long-term growth rate? 0. Yep. Oh my God. Becky. Yeah. Right? Oh my God. So anyways, this is, yeah, great. That was April of 2020. I didn't pick the bottom because it was March, and as it was coming down, I told everybody, get ready, you got to buy it. You can't save your way into prosperity. I totally recommend you should create a list of top 10 stocks. Right? Remember, I said XOM was one, NEO was another one, XPeng was one, MGM Grand was one. What was the cruise line, whatever it was? Was it Carnival? I think it was Carnival. So like in here I said, do you think demand for oil will come back? ExxonMobil. Do you think people will return to Las Vegas? MGM Grand. And I gave a whole speech. Why MGM Grand and not something else? Well, they're bigger. They're more established. They're going to be able to tap into the bond market better than another firm, all that kind of stuff. Carnival Cruises, if you want a Hail Mary. Then you want exposure to China and electric vehicles, and if it's too late to buy Tesla, what do you buy? These are all stocks that I've pointed out. Some of these are up 300%. Okay? But the best one was just buy the S&P 500. I said buy everything. Bet on every horse. It's cheap too, by the way. We talked about because of remember the giant infrastructure? Remember that? The giant infrastructure package? I was looking for ETFs specifically focused on metals, maybe concrete. Okay? But that was 6 months ago, 8 months ago. I don't know. Okay. Commodities have gone way up. Okay. Okay. Yeah, Disney, Delta Airlines, yeah. Do you guys remember in August, I said VIX. VIX up or VIX down? It was the third week of August. I said, do you want free money? You can't forget that one, right? Right about in here. Third week of August. Free money. And I explained why. It's not even a guess. Hope says she'd appreciate a course on equities. Never even thought about that. Wowzer. Wowzer, wowzer, wowzer. All right, well, I guess we got some big news later today. La 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 la. Mortgage applications. Okay, that's good. People are trying to buy houses. Yeah, so Robin says, hey, is the day trading group going to meet at 2 p.m. today instead of 3 p.m.? Yes, we're going to meet at 2 p.m. I'll open the day trading room, the war room, at probably closer to 1:30. We'll get the news at 2, and then we'll watch the press conference together at 2:30. James Paul says, yes, thanks, right? You cannot save your way to prosperity. Now imagine in the moment, this is what I'm telling people. Okay? Shug says, we'll cover the Fed later, meaning talk about it tomorrow. See, right now I'm probably doing 4 hours a day live streams. So I talk enough, right? I talk enough. 4 hours a day is a lot. So anyways, we got later today, we got existing home sales. This is the big one because most homes are not new. Now, existing home sales don't count to GDP. The money you pay for your broker does because that's a new service being paid for. But buying one house from another person that has previously bought the house does not change GDP. Okay? Cool. News coming out of Australia later, not a big deal. Swiss National Bank interest rate decision tomorrow. Okay. Bank of England interest rate decision tomorrow. Tomorrow. And you probably have already kept up with the Bank of Japan. They kept everything the same, so that's all good. Great. All right, cool. So again, if you're in my day trading group, I will see you so we can cover the Fed meeting live together as a group. For everybody else, I will see you tomorrow and the next day. So thank you for being part of the Forex.Today YouTube community. Thank you for subscribing. I appreciate you. They're buying REITs is crazy. I'm actually, so one of the things I bought, old folks homes. That's done very well. I've bought dollar stores. Talk about the rich getting rich off the poor. Hey, it's awesome. And then I bought prison facilities. I'm not even joking. So, yeah, I'm making money off real estate investment trusts that invest in the construction, but also management of prisons. I love it. Right. So anyway, so I've been doing that, and I'm probably going to be adding more. But retirement communities are doing well. Dollar stores are doing well, and this is great too because the prison REIT that I bought, I think was set up 7% in the first month I bought it. How cool is that? So yeah, so I did a lot of that as well. So it's like I own something like 4,000 apartment buildings. I own something like 10,000 liquor stores and dollar stores. And then I got myself into some prisons. I don't know. I think it's only 4 or 5 prisons. But hey, it's 5 more prisons than I used to own. But of course, I don't own the whole thing. I just own a little piece. But hey, man, it's a good business, apparently. Talk about stable and growing, huh? So interesting world, interesting life. Thank you for sharing yours with me. And I will see you again soon. Take care, everybody. Cheers.